This is Ashley Tyson with OZPros.com, where we specialize in simplifying sophistication. So today we're going to show you and we're going to walk you through our website about how to create a qualified opportunity fund and qualified opportunity zone business. So we put a lot of work into creating forms where people can do it themselves, where they can actually go onto the website and they can create their own qualified opportunity fund and opportunity zone business. So the first thing you need to do is to go to OZPros.com and you need to click Get Started. And then that's going to take you to our page, and it'll take you to where you can choose to schedule a strategy call where you'll spend an hour on the phone with me, and we will go over entity selection. We'll go over all of the questions that you've ever wanted to ask about opportunity zones, but couldn't find them on the internet. And so we're going to hit all of those so that you are equipped to be able to do this yourself, or to maybe specifically figure out if it makes more sense to either engage us to do it or to go straight to another process. And so that's what that strategy calls for. Assuming that you're ready to get rolling, you're then going to go down here and you're going to click on Get Started, and you're going to build your Oz entity now. So once you do that, it'll actually take you to a link to this tutorial video, and you can click on that and you can watch through all of this entertaining video, because that's what you're watching now. So when you're down to get started on it, you scroll down on here and it says create your Oz entity. And so the first part of this is that you want to fill out your the name of who's going to be doing the form right there, and then you want to put your email address so that it will actually send the forms to you. Then you're going to want to put your phone number in here as well. So then, more than likely, we're probably going to end up doing both. You're going to do a qualified opportunity fund and a qualified opportunity zone business. So you're going to click on both. Then once you go to the qualified opportunity fund, you're going to choose what kind of fund you want. And more than likely, you're probably going to decide that you want a limited liability company, because a limited liability company is going to allow you the most flexibility. So usually you're going to have it be a limited liability company that's taxed as a partnership, because it's crucial that it either be a partnership or a C corporation for purposes of making your investment under 1400Z, under the terms of the Tax Cut and Jobs Act. So then you're going to pick which filing state you want. Typically that's going to be your state that you reside in and where you're going to actually be filing your taxes, because otherwise you're going to end up having to file another tax return in the state that you choose. Now, sometimes that could not be the case. Sometimes if you're going to be raising money in the fund, you may want to actually use a Delaware entity, or sometimes you may also want to elect to use a state that doesn't have any income tax. And we can talk more further about that if you wanted to set it up on a strategy call, or you can do some research about that if your state doesn't follow 1400Z. So North Carolina does not. And so there's a lot of conversations that I'm having with folks about not utilizing North Carolina as their state for setting up their qualified opportunity fund in case they happen to move prior to the 10 years, so that way when they go to exit their fund, they're not paying taxes because North Carolina chose to exempt out of 1400Z. So in this case, we're actually going to choose Delaware because I'm in North Carolina, but I don't want to actually file it here. And then we're going to choose the QOF entity name. So in this case, we're going to call it the OZ Pros QOF. And then you want to put out in there, and you actually want to put in this form like LLC, or if you're a corporation, you're going to want to put Inc. there, because it'll ultimately end up generating this into your forms that our software generates. So then you could choose whether you want to file it or you want us to file it for you. And then it's going to show what the filing fee that Delaware charges. So then you need to put a description of what the QOF's anticipated business is. And this is either that the QOF will be doing or that you'll be doing through your QOZB. And so in this case, we're going to be investing in workforce housing and other multi-family assets in opportunity zones. We'll put all the language in there that says that it's going to be just for purposes of being qualified opportunity fund for Section 1400Z and the other requirements that the Form 8996 says that you have to have in your organizing documents. So what we're looking for here is for you to put something in there that's going to indicate what you're actually going to be doing with the business and what the business is going to be doing. So then you're going to go down here and you're going to actually put in the business location address. And it's actually fairly important because you're going to want to make sure that you've got a mailing address that's correct in here so that we can get you your mail and any other kind of notifications. Certainly if you're going to be filing this and you're going to be the registered agent, but if we're going to serve as your registered agent, so that's what this box is right here, then we need to make sure that this address is correct for purposes of sending you any kind of communication that we get from the state or any kind of legal filing and that kind of thing. And that's what a registered agent does. So they serve as an address and as a person for you to be able to receive service of process from the state or from official filings or any other kind of lawsuits, that kind of thing. Doesn't sound like a very fun job, so we're willing to do it for you if you so choose. And certainly if you want to have a degree of anonymity, then you're probably going to want to dump us in there as a registered agent. Then we're going to need to know whether your QOF management structure, so in the case of an LLC always has to have a manager. And so we need to know whether that manager is going to be an entity or whether that's going to be an individual person. And so we'll need you to check this off. Typically it's probably going to be an individual person, and so you're going to put whoever that manager is going to be. So if it's an individual person, like in this case, you're going to put me in there because I'm going to function as the manager for this entity. And then if you need more managers, so like we want to, in this case, that Jimmy actually is going to be involved too, and you can add in as many managers as you like. Alternatively, if you're setting up a fund that you're going to be raising money for, and you're actually going to have an entity that functions as your manager, then you're going to structure it, you're going to pick this box, right? And so that would wipe out and it would eliminate those other ones, and it would put in instead the entity. And so you'd have like OZ Manager LLC. And then you're going to have somebody that signs on behalf of that entity, because you can have another entity be the manager, but there ultimately has to be an individual that signs. And then you're going to need to indicate what that person's title is. So if it's another LLC, right, and like this case it is, then it would be a manager. If it's a company like a corporation or an Inc., then you're going to have a president or a vice president or some other kind of officer down here. So then the next function and the next kind of piece and the information we need to get is who is actually going to be the member of the QOF. Now, this is all going to be tied to who the taxpayer is that's making the investment into the opportunity fund. So if that's an individual, so if you incur the gain that you want to roll over, then that's going to be your name that you put into here. If that's a corporation where you incur the capital gain, then that's going to be the corporation, right? So if that was the case, say you had a C Corp and you wanted to roll over the taxes from that, then you would select entity here, and then you type in the name of that entity. So you put in, so this would be Holdco Inc., right? And you'd stick it right there. And then for a corporation, for an entity that's going to actually be the member, there always has to be a person who's going to be the signer. So in this case, it's going to be Ashley Tyson, and I'm the president of Holdco, right? And then this is where you add in exactly how much you're rolling over. So Holdco actually had $1 million worth of capital gain last year, and so we're going to put in $1 million here. And then because we're actually going to need this to be a partnership, I want to make sure that Holdco only has 99.99%, right? And then you're going to want to put in what the Holdco's address is, right? And what you've got a suite number, and then what the city is, state, etc. And then this actually will go into the operating agreement. So if you want to put a social security number in here, you don't have to. In this case, it actually wouldn't be the social security number. It would be the EIN number for the Holdco. But you could put this in here, and then what that'll do is that that'll put it in your Exhibit B cap table of your operating agreement, which sometimes can be handy for your CPA or for you as you're trying to file things and as you're trying to find numbers like that. Now, on the other hand, if this is an individual, so I myself had $1 million worth of capital gain last year. It's basically just the same thing, right? And in this case, I could put my social security number here. So either way, it doesn't really matter. You can do the entity or you could do the individual. So then we're going to add a member here, and because each QOF needs to either be a corporation or a partnership. And a partnership, by very definition, has to have more than one member. You cannot have a single member entity here. So in this case, we're actually going to put Jimmy in as the other member to make it a partnership. And then he's actually, because he didn't have any capital gains, he's going to put in $1 for his 0.01% interest. And then you put in Jimmy's address here and his email. And then if you wanted to add members, you could. But in this case, it really doesn't make a whole lot of sense because you got 99.99% and then 0.01%. But in the case that you had people with like $1 million of capital gain and then $100,000 worth of capital gain, that's where you would want to do this. Now, the thing about that is that if you've got people, so let's say that were the case, let's say that Jimmy did actually have, let's say that he had $1 million worth of capital gain, right? So you drop that in there, then his percentage interest then is going to be proportionate to what he's putting in here at this amount. So it's important that you have these model up with how much money is coming in the form of a capital contribution. So what you couldn't do is have $1 million here and then like $100,000 here and then have this be 50-50. In that case, it would actually need to be like 90-10, right? Or whatever the splits are for the amount of money that's coming in. So important that you get those dialed in like that. Let's leave this at $1 million and we'll put them in at 50%. And then if you need to add members, like I said, you can. So that wraps us up on the Qualified Opportunity Fund. Now it's time for us to go down into the Qualified Opportunity Zone business. And so when you're looking at your Qualified Opportunity Zone business information, once again, we need to choose what kind of entity type we're going to use. And it can either be, once again, more than likely you're probably going to have either a limited liability company or a C corporation. And you're very rarely, I think, probably going to have a C corporation, namely because of the double taxation issue. And if you're not worried about the double taxation issue, you want to get around that double taxation issue by utilizing the opportunity zones, you got to be very careful about that because you got to make sure that you can deploy the capital that you're going to retain in earnings into Qualified Opportunity Zone business property. So we've kind of hit that on the podcast a lot. We've talked about that. But it's really important that before you choose to make either one of these a C corporation, that you talk to a tax professional about that to make sure that it's going to make sense and that you're not going to run afoul of any kind of double taxation issues, and that you're also going to be able to deploy the capital from the business into Qualified Opportunity Zone business property at a fairly easy, on a fairly easy basis, so that you have some kind of means, whether that's buying houses or buying other businesses or buying other qualified opportunity zone business property, that you've got a method for being able to deploy that capital. So in this case, we're going to say that it's going to be a limited liability company. Now in this case, I'm not so worried about the QOZB's location because I'm more concerned about where I'm going to actively be doing business. In this case, we're going to be doing business in North Carolina. So I'm going to choose North Carolina for that entity filing state. And we're going to call this the OZ Pros QOZB LLC. And then obviously we want OZ Pros to file the paperwork, and North Carolina charges 127 bucks. This business location address it defaults from the previous one. So if you want a different one, you need to make sure that you put that in there. You don't necessarily have to be in an opportunity zone from the outset, but we specifically put this in here because it probably makes sense to be, because if you have an address that's outside of the zone, one of the things that you're going to need to worry about is making sure that you have your asset test, that 70% of your assets are inside of the zone, and that you've fully taken account of that address that's outside of the zone, and that it's not tied to the business in some way. Or that if it is tied to the business, that you don't have more than 30% of the business's assets there. So then we've got a place where you can initial, so in this case, so drop it in there. And then where the actual county place of business is. And then once again, I want OZ Pros to be the registered agent. And then for this QOZB management structure, it's the same conversation as the QOF, right? Do you want it to be an individual person or an entity? A lot of times it's easier just to have it be an individual person, to have that person function as the manager, right? So in this case, we're also going to want to have Jimmy be the manager. So you can add as many managers here as you like by just clicking that button right there, the add manager button, and it'll add those in as managers. Now, so getting down into the members, so this is key, right? So the whole reason why you have a QOZB is because you're going to drop the money from your QOF into the QOZB, right? So you're going to be taking the money from your QOF and dropping it down into the QOZB so that you can satisfy that 90% test. So accordingly, your member type for the first one is going to be an entity, and then it's going to be the fund that is up here, or the fund that you've previously set up that's going to be the entity in your QOZB. And then, so this would be, is the entity managed by an individual person or an entity, right? So this case, it was by, I think that we finally settled on that it's actually going to be myself as the manager up there. And then, once again, right, because we're putting all the money from the QOF down into here, it's going to be 99.99%, and then we're going to have $2 million worth of capital gain. So because we each put in $1 million to the QOF, and now we have $2 million that's going into the QOZB. We're going to have the same address here and the same social security number, but then once again, because our QOZB has the same rules as a QOF, that it either has to be a corporation or it has to be a partnership, we're going to add another QOZB member right here. And so once again, it defaults to the entity, and it defaults to the original entity that would be the fund. And obviously that's not going to be the case here. And so in this case, we're actually going to make me the second member in here because you can actually have, as long as there's two unique taxpayers, and in this case there will be, so the QOF will be a member, and then even though I'm a member of the QOF, I can still be another member of the QOZB in order to have it still walk and talk as a partnership. And so there's been a lot of questions about that, about husbands and wives. So you could have a husband and wife be the QOF members, and then you could also have the wife be the additional member, or the husband be the additional member at the QOZB level. And so then I'm going to get 0.01%, because I'm only putting in $1 here, right? And then we're going to, once again, you want to put in the address and the email address. And that's how you complete the portion relative to the qualified opportunity zone business. So once you've got your qualified opportunity zone business information entered, then you're going to decide whether or not you want these additional options. More than likely, everybody is going to want and need a 31-month business plan. And they're probably going to want the compliance checklist spreadsheet as well that you're going to be able to provide to your accountant and that you're going to be able to utilize in order to do your 90% test and your 70% test, your 50% income test, and then also to do some analytics on the 40% intellectual property or non-tangible property use of the business. And that's all set out in the compliance checklist spreadsheet, and it actually computes it for you. So you click yes there, and you click yes here, and then you hit next. What that then does is that takes you to where you can then start working on your 31-month business plan. So you're going to have the plan creation date, which is probably going to be today. If you want to be in the future, you can certainly pick that. So actually, this is my anniversary date. I was married on St. Patty's Day, which is pretty cool. And the project description for what we're going to do with this qualified opportunity zone business is that we are going to build workforce housing in Charlotte, North Carolina. And you could put, I mean, you probably want this to be as, kind of specific as possible. So you can say build X number of units of workforce housing in Charlotte, North Carolina. Then you're going to have your phases. And so each phase, each project is going to have a phase. So you're going to have your, formation and entitlement phase, right? You're then going to have the construction phase. Then you're going to have the lease-up phase. And you can enter in as many phases as you want by just filling out and clicking in an add phase button right here. So that could go across the board. So this is for a real estate project, right? Is that, there's going to be kind of specific phases. For a business, right? So if we were to, I've got another business deal that we're working on, and it's actually going to be an acquisition and roll up of construction cladding companies. And so that's going to be the project description. So the phase one, once again, is going to be formation and let's say due diligence, right? Because there's going to need to be due diligence that's done. Then the phase two will be acquisition of core company. Phase three is going to be acquisition of add-on target companies. Oh, I spelled acquisition wrong. The good thing about it is it's got spell check even in the forms. And then the fourth one is going to be that we're going to increase productivity. We're going to scale up by increasing productivity. All right, so then you're going to have a project budget summary, right? So a total budget of what you're going to spend on the project. So in this case, because we've got $2 million that we've got in our QOF that's going to be dropped down into the QOZB. And so that's actually going to be our equity amount right here. Right? And so then we're actually going to lever up that $2 million and we're going to put 80% leverage on it. And so we're actually going to get a loan amount of $8 million to make it to total uses of $10 million, right? So then based upon, right, so each time you inject working capital, each time you inject money from your QOF into your QOZB, you're going to need to do one of these 31 or 62-month business plans. For each tranche, that's what you call that, each equity injection that you put into it. So this one is $2 million bucks. But for that next round of capital gains that Jimmy and I have, if we had another, let's say we had another like 1.5, we would then put $1.5 million for this specific one, right? If we were going to be bringing more equity to the table. So then it jumps down into the quarterly business plan, right? So we break it down by quarters, and so specifically, this project is going to start in 2020. So you're going to fill in your quarter year right there. There's actually a video, and I'm not going to go through it here because we've actually got a link to it right here where you can click here, and you can go to a video about where you can find the census tract. And so in this case, we are going to use the census tract that we used before. And that census tract is that right there. So we type that in. And then we're going to want to set out the goals and objectives for what we're going to do during the first quarter. So for the first quarter, we're obviously going to have entity formation, estimated start date. So we're actually going to get rolling on this. Like March 24th. Then we're going to have PPM documentation, and we're going to start this on April the 15th. All right, and then you can go through and you can add as many things as you want into this, and you want to kind of be succinct, right? You want to try to add something in there, like certainly stuff that you're going to do. Don't get too focused and narrowly focused on this, because one of the things that you actually have to do is demonstrate that you actually complied with the working capital plan. And so, leave it kind of broad so that way you've got some flexibility, but also you want to also make it specific enough so that it doesn't look like you just did a giant hand turkey like you did in kindergarten and said, okay, that's my 31-month business plan, because that's not going to fly. So your quarter one 2020 total budget, let's say that they used it and they went through, we're obviously going to use OZ Pros, and so we got a good deal there. And so all in, it's going to cost us $25,000 for our PPM and all the formation docs that we're going to do. And one of the things that you could do in here is you could have accounting setup, third-party management setup, that kind of thing. And you just want to attach a date to that, right? So we'll have that be April 15th too. So then you go down here, right? So the total budget so far is $25,000 because you've only got one quarter filled out. So in order to do the next quarter, you then hit add quarter, right? So we then have the census tract, right? We know where that is, and we're going to put that in there. We're going to have the quarter year here. And then we're going to go down, and this will be our next quarter goals and objectives, right? So in this quarter, we're actually going to acquire the property. I'm going to do that by, this is actually this is now in quarter 3 of 2020. So that's going to be, we're going to say that that's going to be happening July 6th, right? And if it was going to be prior to that, we'd want to put it up in the previous quarter, right? And I think that you probably want to do this and do it in conjunction with, instead of kind of starting your quarter with your start date for your project, that you ought to have the quarters then kind of go along with the actual calendars. So even though it'll say that it's your first quarter up here, just in your mind, if that starts on, and so in this case, actually what this would probably be is we're going to start this April 1st because that would be the beginning of second quarter. So then the second quarter for us here will actually be, July, and then third quarter will be October, etc., right? And so then once you get into the next year, then you'll be on the actual yearly calendar quarters, that kind of thing. So you're going to add your next item that you're going to do in here. You're going to acquire property. then we're going to actually start moving dirt. So we're going to clear and grub the property right here, and we're going to start that by July 15th. Let's say August 1st, August 3rd. And then we're going to grade and install utilities after that. And that's actually probably going to be, it's going to take us a while. So we're going to go into like September 15th, right? So then, because that's actually a fair amount of our acquisition costs. So this is actually going to be, I think that our land acquisition is going to cost 1.5 with a lot of our, the stuff that we're doing. We're actually going to do that right there, right? So then we've got an actual total budget now that's 1.525, right? So then you just continue to do that through the quarters of your project, and letting out and setting out the calendar, almost like a Gantt chart of how long you think it's going to take you to do your project. And you can add as many quarters as you like here, but keep in mind that you're going to need to deploy capital. If you're an existing business, it would need to be within 31 months. If you're a startup business, you actually have 62 months. And so you can show up to quarters, and you can add quarters in there all the way up to 62 months for deploying your capital. But then when you're done that, you click next, and then that'll be done. And then you've got your submitting payments in here, and you can enter the promo code that Jimmy, your brother-in-law, has given you. If you've got one from the podcast or whatever, you'll type in your credit card number here, and then you're going to then go and click on submit right here. And so you type your information in here, you click submit, and so we've got a test deal in here, but it'll submit the information in, and then we will then review your information, and we'll send it on to you with your forms so that you have everything done, and we'll take action. If you've decided that you want us to file it for you, we'll get those filed, and we'll get you all of your paperwork. And that, my friends, is how you complete your formation, your QF and QOZB formation, and your 31-month business plan via the ozpros.com forms. Thanks again for being a customer and a fan, and we look forward to working with you at OZ Pros. Cheers.